You're building a business. Don't let a 1099 mistake burn it all down. Wrong classification could cost you more than your monthly revenue. Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy, we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business. Oh, fire alarms. Okay, so break this down. What's going on?
So it's a very easy and simple mistake to make.
Oh, okay.
Misclassifying someone as a contractor when they are actually your employee.
Ooh, okay. So there's some rules. Yeah, okay.
So, and a lot of people I see, they're like, oh, well, they're only going to be on set for 4 hours.
Yeah.
Or I don't really control a lot about what they're doing. I'm just hiring out, this one piece. Or I have like a tattoo artist that's working in my shop. Are they really my employee? If they're able to do their own schedule and they're bringing their own clients and
and some states are saying that they are indeed employees. Okay.
Exactly. Okay. Or, we see a lot of interior designers when they have an assistant that's working on a project and you say, oh, but they're only working on this one project for this one client. But if they have to do site visits or there's certain deadlines for things, then you start to get into a really murky area.
Gotcha.
And a lot of people, because when you bring on someone as an employee, you need to have a payroll system that you're paying for.
You gotta pay employer taxes.
You have to pay the employer taxes. You also have to give them benefits in some cases.
Yeah, for a certain number of hours or stuff. Yeah.
Right. And especially if you're a single member LLC, if you have another full-time employee, then they're eligible for all of the benefits that you're giving yourself as a full-time
so it can
employee.
be expensive then.
So, right. So that's why having everyone as a contractor where you're just paying them a flat fee can seem like it's a really simple pathway, especially if they have a bit more control over their time and their work than you would think with a regular 9 to 5 where you're driving into an office or you're working as a barista somewhere. But the rules between what is a contractor and what is an employee are a little bit murkier. So
that's so fun.
I know. And then again, this is one of those situations where you're like, why is everybody paying me on wrap book all of a sudden? And why do I have to fill out this? And why won't they just give me
just a flat fee or whatever? Yeah.
Or, why are they paying me on W-2, but then also giving me a 1099 miscellaneous for renting my gear?
Yeah.
So now you've just duplicated all of your forms, and then you go to your tax person and you're like, I have 40 W-2s. Why is this happening?
Yeah.
So one of the things that you want to keep in mind, generally an employee, if you control when they work, where they work, and you give them the tools to do the work or the training on how to complete this work, and there's very specific deadlines of when these things need to be turned around, then basically they don't really have a lot of control over their position. So then they're going to be considered an employee. Even if, like I said, you're only calling them on set for 4 hours because you're calling them to a certain place at a certain time, they are your employee, even for that short period of time.
Okay.
And so you need to make sure that they are classified that way. And so that's why a lot of times in California, we're seeing a lot of people do the loan outs or going to corp, or they'll only work with someone who has an LLC because what they're doing is they're pushing off of those employer responsibilities onto your company instead of it being their company. So there's a few different ways to get around it. Obviously, you can hire cast and crew. You can have wrap book. Because, like I said, adding them to your primary payroll means that they're going to be eligible for the benefits that you give yourself.
Okay. So there is a slight workaround of like not having to do that?
Right.
Okay.
Because wrap book, cast and crew, they're PEO. So they, or like they're the employer of record. So
I got you. So
wrap book is their employee. You're not their employer.
Okay.
So that way you're still kind of protecting your benefit structure and it's costing you a little bit less. And then you can reserve full-time employees of your company for someone who is maybe a project manager that's across a lot of projects. You know, we have some that are doing, you know, managing different events and they're doing the events all over the country and they have that one point of contact.
Yeah.
And then that point of contact is then going into the city, hiring all of the crew and the talent for that event.
Yep.
And so that way the project manager would be on the company's actual payroll, but the talent and the crew would be going through cast and crew and wrap book.
Okay.
And that way you don't have to worry about workers' comp.
That's another one. Yep.
All of those audits that come through, that all gets handled by that employer of record.
Very cool.
And then also, are you giving them, you know, the right amount of breaks, and do they get the correct number of sick days that they're supposed to have?
They would handle all of that. Okay.
Yep. And there's a lot of, like, even when you think about a 401k plan, sometimes the way that a 401k plan might be written, if it's very simple, it might just have like, you just have to be there for 30 days. So, and it won't have a delineation between part-time and full-time. So then if you're using the same person, even only a little bit, but you keep them on your payroll for too long, then they'll automatically be eligible for those 401k benefits.
Okay.
Because it's just a function of time. And then also we have, even if, let's say, they're a part-time person, and again, maybe an interior designer, you're subcontracting some of the work because you know, maybe the, you know, like the drafting of the rooms, or, you know, maybe sourcing the items. You give them what the style is supposed to be, and they'll go through and they'll do the sourcing. They'll go to Crate and Barrel for you, and they'll do a lot of the purchases and legwork, but they're only working part-time doing that for you.
Yeah.
If they have worked 500 hours in the last 2 years, then they get all the benefits of a full-time employee, even if they're only working, you know, 10, 20 hours a week.
That is crazy. Okay, so you need to be
there's a lot of incentive for people to say, like, oh, I want this person to be a contractor.
Yeah.
But knowing that you have control over where they work, when they work, and then you're also providing the training that they need in order to complete the work, they're going to be considered an employee. And the states especially do a lot of audits on that.
Yeah, we have seen that.
They do not take kindly to when you are misclassifying people, because the whole reason why classification is so strict is to make sure that people are being protected from, you know, employers taking advantage of them.
So workers' rights, like making sure. Yeah,
exactly. That people can get the sick time that they need, especially in a state like California and New York, where you have paid family medical leave.
Yeah.
You know, if you just classify them as a contractor the whole entire time, then they're not eligible for that. And they've just lost one of these, you know, kind of basic rights as an employee. So the states are going to make you pay back everything, and then they're also going to penalize you. And I've even seen where if it's gone on long enough, that there's potential for criminal charges at that point in time.
Yeah. Okay. So,
and one of the things too is not knowing is not a defense anywhere in taxes, because as the business owner, it's your responsibility to understand all of your responsibilities and everything that you need to do to stay in compliance with all of these regulations.
Yeah.
So you can't just say, oh,
I didn't know. Yeah.
Right. Or I thought it was something different. It's your responsibility to either know or to hire someone who can advise you in the correct way. So before you go through and you say, I'm just going to hire everyone as a contractor, you need to really look at what you're doing and decide whether or not those activities actually fall into the employee side.
Yeah.
And like I said, there's ways to get around it where maybe you only hire LLCs. But the key there is...
there's a catch there too? Okay.
So even if you hire an LLC, you have to be able to show the state, especially as the state of California, they want to know that you are not the primary employer or the primary client for this LLC.
Okay.
So if someone creates an LLC just to work specifically with you,
you can still be considered an employee.
Still an employee.
Okay.
Right. So I've seen, even for a plumber,
Really?
California has asked us to provide a copy of the plumber's business card to prove that he's advertising to other clients.
That is wild. Okay. Yeah. So they're really cutting down. They're really like strict about this. Yeah.
Right. Yeah. So not only is it let's get an invoice from the contractor or that's showing a different business name, but does this business actually have other clients?
Yeah.
And are they advertising to other clients? And are they able to take on other projects? Because if it's an LLC that's only working for you, they're going to say that that's an employer-employee relationship there.
That's so crazy. Okay, so definitely going through it with intention of making sure that you're not ticking off those different boxes, or if you are, you have a game plan in place.
Right.
Yeah.
Right. Okay. And so that's why you'll also see some of the production companies are getting a little bit tighter and just kind of blanket saying everybody's an employee. I don't care if you have a loan out.
With this.
Yeah, we're just going to call you an employee because, we've seen penalties upwards of $100,000. And like I said, criminal charges because the negligence went on for so long. And having to work with the auditor and show that there wasn't any malicious intent or anything like that. It was just a straight, wrong categorization. So it is a very special circumstance that you need to make sure that you're on the correct side of.
Yeah.
And even if you're going to say, let's say you're not really based in California, if you have a production and you hire California people and you're in California, then you should probably hire them as employees. So as you're going from one state to another on location, you need to make sure that you're in compliance with those state regulations because wherever you're operating at that point in time, those state laws are going to kind of form what choices your business needs to make on top of what your home state is saying.
So crazy.
So you do have to be a little bit careful there. And then, like I said, one of the workarounds that I have seen is the production company, you have someone that is an employee, classify them as an employee because, again, you control where they're working and when they're working. So you classify them as an employee. But instead of having the whole day rate go as an employee wages, they'll break off a portion of it and say that a portion of it is for your gear rental. So things like makeup artists, because they have to bring their whole kit.
Okay.
Yeah. So they'll break off a portion of it to be that rental fee. And then the rest of it is going to be the wages. Right.
Okay.
Right. And you do have to be a little bit careful because you're going to get a 1099 miscellaneous for rental items, which normally renting items is going to be considered a passive activity.
Yeah.
But you're in the business of renting this product. So then that's going to turn it into an actual active business on the Schedule C that's going to be subject to Social Security and Medicare. So again, they're kind of pushing those employer taxes back onto you. So not only do you have to be careful about how you're reporting this income to people that you're hiring, but also how you're reporting when other people are hiring you in that way.
Yeah. Okay.
So it brings to light a lot of different items, especially when it comes to tax planning. Because like I said, in tax planning, we might say, hey, let's have this certain retirement plan, or let's do these employee benefits. Say, okay, you can give employee benefits that are industry standard, that if you were hired as a W-2 employee, you would receive at whatever jobs or what you got at your prior job. But you still have to be open to giving those employee benefits to other people that might enter the company and recognizing the periods where you have that shift where somebody is going to be considered an employee of your company, and just knowing about that beforehand so that you're not chasing the ball afterwards, because a lot of times it becomes really difficult to hire someone as a contractor and then later on hire them as an employee.
Yeah.
Because all they see is their check is smaller.
Yep.
And then they don't get to take any deductions.
Interesting. Okay. So there's just going to continue to be the trend where it won't be like you have 1 million 1099s at the end of the year. You might just actually have 1 million W-2s kind of thing. And then maybe a couple 1099s for rental of your stuff. Okay. Okay. So both sides need to be intentional with what they're doing as well for the tax part of it. Okay.
Right.
Yeah.
Yep. Because I mean, even in California, a virtual assistant is considered an employee.
Really?
Yes.
Oh, wow. I guess you are doing the things. You're telling them when, you're telling them deadlines. Yeah. Okay.
You're teaching them how they need to manage your
stuff. Wow. I mean, I guess, they check it all off. So, yeah.
Right. Exactly. So that's why I say, like, even somebody who's working for you remotely and you're not controlling where they are and you're not giving them equipment, it still may fall under an employee situation.
Gotcha.
So, I mean, we've had situations, like I said, like where you have a person who is currently classified as a contractor. They are bringing in their own clients. They are scheduling their own, they have their own schedule. If they're not able to make their appointment, they're canceling it with their client. Like, you are not managing any part of the relationship between them and their clients, but they're still going to be classified as an employee because of the way that they interact with your company. So, like, if you have a photographer and a photography studio and, so you just have to be really, really careful about how you're positioning your business, how you're reimbursing people, because like if you have a photography studio where the clients are paying you and then the photographer is there because you're acting kind of like as a middleman through that process, even if they're, so it can get a little bit tricky. So it's worthwhile before you get to the phase where you're like, I want to bring on a contractor, or I want to bring on an employee. You need to understand what that difference actually is in your state, and then also what rights that you're opening them up to make sure that you're on the right side of it. Because like I said, like even things like, how many hours of sick time do they get and how do you provide that sick time? Or California now has, if you have one employee, then you have to provide a retirement plan.
Oh, wow. I didn't know about that either. Okay.
So, right. You can't just be like, oh, well, I don't want to pay for a 401k, so I'm just going to not have a retirement plan for myself, so no other full-time employees will have a retirement plan.
But it doesn't work like that. Okay, so definitely making sure you were aware of what all the different states are that you're operating or having people do stuff for you. Okay.
Right.
Yeah.
Right.
Yeah.
Exactly.
I mean, it's fair. It's just like making sure that you're knowledgeable and you're making the best decision that, makes you on the right side of history if they ever audit you later.
Because this, like I said, it's a very easy item to get wrong and not know about it and feel like you have a very strong argument for them being contractors, and the state will still disagree.
Yeah. Okay.
And they will still say, no, we don't agree and we don't like that, so we're going to say that they're an employee. So making sure that you have an advisor that has gone through audits, that knows how the state feels about these things and can advise you. And like I said, it's all about advising. So, I mean, I can't force anybody to hire someone as an employee, but I can tell you what the benefits and what the drawbacks are, and then also what risks are associated in both methods. And then you can make the best decision for your business moving forward. Because at the end of the day, like I said, it's going to be your responsibility to make sure that you're making the best decisions for the company and saying, well, I didn't know. It's not a defensible excuse. So working with someone that can proactively reach out and say, hey, you may not know this, but I'm going to let you know.
We'll save you a headache later, okay? Yeah.
Exactly. Exactly. Because the last thing you want is one of those letters. And I mean, easily. Once you get that letter, it's a 10 grand bill.
Yeah.
minimum.
It's wild. Okay.
Mhm.
So intention on both sides, or have someone that will tell you, like, hey, don't do that. Or you probably should do this. Yeah. Okay.
So before you expand, before you hire somebody out, especially, like I said, if you're in production and you're controlling where somebody is working, you need to make sure that you're reaching out and you're aware of all of your responsibilities, because even if it's only for half a day, you may still be considered their employee and required to fulfill all of the responsibilities of
as
an employer.
Well, that was very informative.
Right.
Yeah.
So if you have a few more questions, especially based on your specific situation, on whether or not maybe you want to know that you're not misclassifying, or you have something that's potentially coming up and you want to make sure that you are on the right side from the very get-go, because like I said, it's harder to switch in the middle of a relationship.
Yep.
So if you would like that kind of peace of mind, put a comment below or reach out to us and we can jump on a call and kind of go through all of those responsibilities.
Yep. Bye, guys.
That's a wrap on Let's Get Fiscal.
Ready to stop guessing and start saving?
Click the link in the show notes.
Grab your consult and let's make your business work for you,
Not the other way around. You've got this.